me now? Yeah, I think it's good. Okay. All right. So yesterday was a U.S. bank holiday, right? Let's look at the week. Mm, right. So here's what we have for the week. Yesterday was a bank holiday. Today there is no news. Wednesday, tomorrow is CPI, and then Thursday is PPI, and Friday is retail sales. So we've got a very busy week coming up. It's a high volume week. Okay. So today we got no news today though. So today should be just a regular trading day. Um, yeah. So let's get to the chart. Let's discuss what we have for today. So gold has been on steroids since Trump got elected. He's president-elect. Gold has been on steroids. It's been dropping. We have huge daily candles. Yesterday was a US holiday, and we have a 760 pip daily candle. Um, Last week, I think the day after election, we had almost 1,000 pip candle, 980 pip candle. Yeah, so we've got a lot of volume, and then the day after, then the next day was 675 pips up. That was the pullback, that was the correction, and then continuation down. So as you know, gold prices should continue to drop because the US dollar, the economy is supposed to now, they're anticipating the US economy to get stronger. So gold prices should continue to drop. We might have corrections, have pullbacks, just like we did here last week. We had a correction, right? So whenever price gets to these weekly support levels or these psychological round numbers, that'll like 2600, 2550, we should have pullbacks. But generally, price should continue to drop on the higher time frame. Okay, so on the daily, let's just let's take a look at the daily. So yesterday, price closed below 2650 and below this weekly support level, right, of 263. Now, I think last week, when price was somewhere here, I had said price is heading. No, when price did make the drop and we had the pullback, I said the price was coming down to 2650 and to 2633. I think I said that on X. If you follow me on X, then you'd see my comments there. I said the price should retest 265 after it tested 2650. It should retest 2650 and then 2633, and that's exactly what it did. Now we closed below 2650 yesterday and below 2633. Can you hear me? Yes, yeah, you can. 2633, right? So now we've price pulled back during the Asian session and then has touched 2600, right? So we are in a heavy downtrend. Let's take a look at our chart and our trading chart and then draw our zones for the day. Okay, so let's clean up this chart. So on the daily, we could be heading to 2586 next. We haven't touched it yet. So we should be heading to 2586 next. And then if we close below 2586, if you see 1 hour candles or 4 hour candles, if you see a 1 hour candle close below 2586, we should be heading to 2558, right? That's where we're heading next. Um, yeah, so let's get rid of all of these. Okay, let's get rid of everything. It's a new week, so let's get rid of everything on the screen. Let's keep these labels to the side. Yeah, it's a clean chart, okay? It's an absolutely clean chart. There is nothing to the left of price. I've deleted everything. So these are the same levels that you see here on the chart are the weekly support levels that you see on this, right? I've just moved them to my trading chart. Okay, let's start. We've got about 30 minutes to the New York Open. So it takes about 30 minutes to do prep work before the session starts. That's the kind of time you should have for prep work, okay? So what I'm doing right now, I'm just drawing supply demand levels on the 4-hour time frame, right? This is what I do every day. Um, uh, it was 95. Yeah, okay. Right, so we got a supply level there. So that's a drop, 3 basin candles, and a drop, base drop, okay? And then we have a level right here, a drop and a base and a drop. Okay, so that is quite far away, so that should be enough for now, enough for today. Then we're going to have to look left of here for demand. Okay, so we're here. So here we have a rally, a base, 2 basin candles. That's a rally, 2 basin candles, and a rally. Okay, so let's mark that out as well. So today is the 11th month, 12, just put it for 21. Okay, and below that we have a drop here and then a rally here. Right, you have a drop here and a rally here. So there should be a 1-hour basin candle there. So I'm going to just use that area there, probably go down to the 1-hour. Yeah, that's it. Okay, that's the 1-hour basin candle. So you have a drop, a base, and a rally. Okay. So let's put those numbers up down there. That open is 681, low 984. 6 81984. Okay, and then let's put these numbers also. Open 065482. 065482. Then we have this base. It's a fairly large base. We have a rally here, but all of that is a base right up to here. That's the drop, and that's the base. The reason these are all basing candles is because that's the start of the base. That candle has more wick than body. If you watch my previous streams, you'll see how I draw supply demand levels. The basing candles need to have more wick in them than body, more combined wick in body. So there's little body and more wick in that candle. So this would be the base. It's a fairly large base. Yeah, we'll have to take all of that in. That's the base. Okay, current price is there. It's about 160 pips, about 350 pips away. Okay, 274, low 686. 274, 6.86. Okay, then below that is this. Right, we have a rally, a base, and a rally. So mark that. This is a leg in, base, leg out, rally, base, rally. I think that should cover it. Yeah, that's about 800 pips. Yeah, that's fine. 949, low 304. 949, 304. It's very likely price is heading to this base here, right? So below 2586, that's probably where we're heading. Just keep that in mind, because there's a lot of range. There's a lot of basing candles there, which means there's a lot of buying and selling there. There's a range there, so that's probably where we're going to get a pullback or a reversal around below 2586. Just keep that in mind, right? So our drop is here. This is the next drop. Yeah, just. Oof. Save this. Yeah, we've already tapped into this demand level, right? We've tapped into this. This open is 9065. 9065. Yeah, perfect. Okay, we're good. So there's demand there. There's this big demand level here where price should be where price should come into. Price should tap this level here, and we should get a reaction, a pullback, or a reversal at this area. So below 2586, and then there's another demand level here, right? And that's a long way off. That's another 250 pip drop to that demand level. Okay, but before that, we've got all these weekly support levels. We've got a weekly support level at 2586. We've got a weekly support level at 2558, and then a level at 2530. You've got to keep our eye on those levels. Okay, now let's look at supply. So this is the closest demand level that we have. Put our label there. This high is 712, and this close is 903. This open is 905. Yeah. 712 903. Okay, perfect. And this level here is 72.01 527 527 72.01. Okay, good. Done. So the closest supply is that. That's our closest supply. Now the next thing I do is we're going to identify which of these are high liquidity zones and which are not, right? That's the process. So we draw the supply demand levels on the H4 and then identify which of these are high liquidity zones and which are not. So the supply zone right here. Did it take out anything on the left? It needs to take out an opposing zone, right? So it did. It took out this entire zone. Yeah, right there was taken out, and even that there's a demand zone right there as well. All of that was taken out by this move down. Um, let's just inspect that a bit more closely. This low here. So this was the zone. This was the original zone, rally-based rally, and that 668, and the low is 270. So 668 270. Okay. Yeah. Yeah. So there was demand here, a drop on the 1 hour, drop base rally. There is a demand level there, and then there is this H4 demand level that we marked, and all of that was taken out by this supply. Okay. So I'm going to mark this as a high liquidity zone. HLZ stands for high liquidity zone. Okay. A price gets into that area, I'm going to be possibly looking for sells, right? It's very likely though price breaks that though. This has no top wick. This candle has no top wick. This candle has no top wick. We could break that and push up here. We could close above and then close back in. So I'm going to watch price. If price gets there, I'm going to watch. It's about 150 pips away. So let's see if price can get there. If it does get there, that's an area that I'm going to watch. I'm not going to be placing any pending orders, but I'm going to watch that area. Okay, let's get rid of this. Did this demand level take out this H4 demand? Did it take out anything on the left? So it did take out this high here. That was a Newsweek. I think that was probably FOMC. Yeah, FOMC. Was a FOMC candle. Yeah, in September. FOMC news in September. So there was a high created there, right there. That high. Um, just look at the 15-minute. Yeah. So that high was taken out by this zone here, right? So there was some sort of supply there. On the 15-minute, it's visible. You can see the supply, the rally, the base, and the drop, right? That's the basin candle, the single basin candle, and then the drop. And that is supply. That's why price did react to it. It came there and it dropped about 230, 235 pips. So that is supply. And that supply was taken out by this H4 demand zone, okay? So we're going to mark this as a high liquidity zone. Okay, it's a high liquidity zone. Then the one below, is this a high liquidity zone? Yes, there is supply right here. That's a rally, that's a base, and that's a drop, and that's supply. That's a 46, what, a 45, 46 pip zone that was taken out by this wick here, and price came back. This demand went up, right? It took out that zone. So this candle, this FOMC candle, is a part of this zone. So price did push up and take out that. So if you go down to the 15-minute again, put this marker here. If you go down to the 15-minute, it's very clear what price did on the 15-minute. There you go. So that was supply right there, and price pushed up and took out all of that supply, and that move ups happened here in this zone, right? So this too is a high liquidity zone, and it's also at a weekly support level. So we're going to move this label down as well. Copy that label down there. Right, so that's what we have. And then below here, is this a high liquidity zone? One second. Sorry. Did this take out anything on the left? Yes, it did. So this demand zone here took out this supply right here. You can see rally, that's a basing candle, and a drop, right? Yeah. So this rally base rally took out this rally base drop. It took out this supply and moved up. So this too is a high liquidity zone. Okay, so that's what we have for the NY session today. Let's just go down to the 15-minute and clean it up. Yeah, good. Okay, perfect. Okay, so we've got about 10 minutes to about 12 minutes to the NY open. We got a supply zone here, that's a high liquidity zone, and I got a supply zone here, which is very far from current price. I'm not going to look at that zone because that's about 700 pips away from current price, and price doesn't seem like it's going to get there today. We have no news today, so what we can anticipate is probably a pullback or price, a pullback or price come back to retest this low here, right? So in the London session, we made a new low. So this could be a pullback, maybe touch some of these EMAs, either this one or that one, if it gets to this area, to retest this London low, right? That's the kind of move that I'm anticipating. Probably a pullback to 2600 or this demand zone here, or to 2586, the weekly support. That's the move that I'm anticipating, right? A short move, price to come down. Now, let's take a look at this supply zone. Let's see where price reacted to this first. Let's just check where price reacted. Here, this low is 89.69. 89.69. Yeah, okay. Let's look left and see where price reacted. Because now the next thing that I'm going to do after I identify high liquidity zones, okay, so first we identify H4 supply demand zones, or sometimes if you can't see it on the H4, I go down to the H1, right, as you have seen. And then I identify out of the zones that I've drawn, I identify which are high liquidity zones and which are not. And once I do that, the third step is to identify a high liquidity candle, an HLC, a high liquidity candle, which candle exactly did price react to. So we've got 2589.69. I'm going to look left and see the candle that push price up, right? Generally a 15-minute or a 30-minute liquidity candle is what I'm looking for. Okay, the biggest candle in this range. So this candle is a 32 pip candle. That's a 25 pip candle, and that's a 30 pip candle, right? Yeah, so the biggest candle in this range is this candle right here. And that's exactly the candle that price reacted to, right? This candle right here. That's the largest candle in this range. That's 32 pips, perfect. This is smaller, 26, so not that. And this is smaller, so that's 30 pips, not that either, right? So that's the candle price reacted to. Let's mark that candle out. 228904. 228904. Just go down to the, that's in the 15 minute, okay, on the 30 minute, was there a bigger candle? That's 35 pips. That's 44, 43. This is the candle. Yeah, 15 minute. It's ideally on a 15 minute. 15 minute is my preferred time frame for looking at, for identifying a high liquidity candle. 15 minutes is the preferred time frame. But sometimes when you can't find it on the 15, if the 15 minute candle is too big, if that's a 50, 60 pip, 50 or 60 pip candle, then you need to go down to the 5-minute time frame, right? But this is the candle right here. And now if you look at the 5-minute time frame, you will see out of that, it's this candle right here, right? This is the candle that broke out of the zone and then the next. So we can move this comfortably here. 117. Perfect. Okay, so that's the candle. All right, that's the candle. And now price has, that's 14, that's a 21 pip candle, 14 pips. It's come more than 50% of the way price has come down. So once we break this low on the way down, once we break this low, price is coming straight down. It should come straight down to this 2586 or break this zone, right? Once we break here, we should go right through this zone because this candle is 31, let's say 30. It's 30, and that is 32. Yeah, yeah, we should break right through. Once we break this candle low, once price comes back into the zone, it should break this low because the liquidity has been taken out. We've gone through more than 50% of this candle, right? So the liquidity on this candle is done. So it should break through this and come straight through this zone. Okay. So that's once we break this low, that's another 50 pip drop we can anticipate. And then let's look left. What is next? Let's look at the 30-minute time frame in here. What's the largest candle in this zone here? That's 111. That's too big. It's 90. That's too big. It's 128. We'll have to go down to the 15-minute time frame. It's 240. Let's react to that. 81 pips. That candle right there, 81 pips. These are all smaller. 72, yeah, that one's bigger. And nothing on the left. Yeah, this candle here. No. This is the largest. So let's just mark that candle out. Go down to the 5-minute. 50. Yeah, 50. 49. 49.6. Yeah, this candle is bigger. 49.6. This candle 55. 78. 82. No. 55. Nothing here bigger than that. And this one here. 57. Oh, we got a big candle here. 57. 35. 57. 49. Yeah. 72. It's a 27 pip candle. It's a 28 pip candle. It's a very wide range. 27, 26.9. Yeah, that candle's big. Bigger 1 minute candle. 27.1. Okay. We're gonna have to split this zone into two areas. Yeah, that's what it is. The zone is too wide. 364 pips is too wide for a single demand zone. So gonna have to do this. Gonna have to do this. Yeah. 533 681 984 614. Okay, and then This low is 984. 9.64. Okay, that's better. That's better. Just look at what's happening here. Now price is right in the middle of supply demand. I'm not doing anything. I need price to come to the EMAs or come to this zone here. So let's just continue with what we were doing. Just want to find the level of the liquidity candle in those zones. You have that one. I need to find the one here in this zone here. So this candle is 71 pips. Let's get this wick. Yeah, let's get this wick. I love wicks. That wick. That's a liquidity wick. 53 pips. Perfect. Right. So I can come down to there. That's even better. It's about 50 pips. Now let's look at the 5-minute. Just save this. Yeah. That's 49 pips. $49.6. Hmm. Hmm. $26. 6.7. So yeah. That's this candle here. Yeah. That's the candle. Yeah. 455,179. 455,179. Okay. That's the candle in that zone. The price should come to this candle right here. And once we break through that, then we should break the zone. But we should get a reaction right at this candle, this 1-minute candle. Okay, now let's look at the zone below. That's about 300 pips away. To see what price is doing. We're still climbing. There's nothing happening there. Today might just be a correction for tomorrow's move. Tomorrow is when volume is going to come in. Tomorrow is CPI. So it might just be a correction for tomorrow. There might not be a trade today. Right? So there's no need to try to force a trade. I'm going to be looking towards the end of the week. Tomorrow is going to be crazy CPI, but if you do get a setup, if I do get a trade according to a perfect trade according to my setup, I'll take it, and I'll manage risk if price goes against me. But I'm going to be banking for a trade on Thursday and Friday. Those are the 2 days. That's after the chaos, after the CPI chaos. Is PPI and retail sales. Uh, Mostly Friday. Friday is when I want to be taking a trade. Thursday, Friday this week. Okay. So we've got that. Okay, let's do the zone as well here. On the 30-minute, we've got this big candle right here. That's 125 pip candle. Let me just mark that candle for now. That's the largest candle. Ooh. Okay, that's the largest candle in this zone. That's the largest liquidity candle in this zone, right? Now obviously that candle is too big. Let's look at it on the 1 hour. On the 4 hour, should be a wick. Yeah, it's a wick. So on the 30 minutes, it's big. On the 15-minute, um, the 15 minutes, these two candles. So that is a 74 pip candle, and that is much less. Yeah, it's the 74 pip candle right there. And anything larger than that? No. Oh, these are all much smaller. That's the largest candle. That's 46. And go down to the 5-minute. And in the 5-minute, that is 31. I think it's this 57. Yeah, that's the candle. What is this? 69. Oh. Ooh. Got a 70 pip candle there. Price could react after this at 59.59 right there and push up. But just mark this candle here. So we broke above this here, came back 69 pips, 70 pips, a 71 pip zone. What's this low? 59.59, and this one 59.61. Yeah, it's come back. It's this candle. Yeah, that's a tradable candle. Yeah, it's a tradable candle. 5-minute. 590, 50.17. Okay, done. So if price gets into this range, so let me just explain what I did, right? Price has already come here, has tapped this candle, right? It's tapped this liquidity candle. This is the candle in this range. This is the largest candle. Is it 21? Is that bigger? Oh yeah, 31. Let me show it on the 15-minute. 30, yeah, okay, it's this candle. Fine, yeah, it's this candle. So Price has tapped into this candle. So once price gets below 2589.69, we should break this zone. We should go right through it. Once we go right through it, we're coming to this candle here. So that should be about 150 pip drop from there. Right? Price will range a bit, but we're coming straight into this candle, this liquidity area, this light green area. Once price probably going to react, pull back, reverse there. And then once it breaks that, it's coming into this area right here, this candle right here. That's another 160, 150, 160 pips. Okay, so those are the three liquidity areas in the zone. That's what we just did. Now, we still haven't touched the EMAs. Let's look at the supply area here. There is supply here. It's okay, yeah. Okay, that's a supply zone. See if I drew it correctly. There's a supply level right here as well on the H1. That took out. Yeah, we might get a reaction there. Close 668, 270, 668, 2.70. Okay. Okay. Yeah, there is this zone that took out this demand here. So let's just see what price does here. Okay. Since it's a no news day, we might not have a move up. This high is 1018 and the open is 688. 1018, 688. Okay. Yeah. Let's get rid of this. Now on the 15-minute, it's this 30-minute candle here. That's 92 pips. Let's look at the 15-minute. So that's 65 pip candle right there. And on the 5-minute, there's nothing except this candle here. And we've already broken above it. 78 pips. $64 pips. Let's look at the 1 minute. There's a candle there, 17 pips. There's a candle there, 23 pips. Okay, I'm going to wait for this candle to close. And touch this candle closes. Let's see, I might take a trade here. Okay, we'll wait for this candle to close. We draw a fib. Let's see how the candle closes. I want to see how the candle closes. It's going to close a doji. Or yeah, it's closing a bullish candle. So no. Yeah, so no. I want to see a bearish candle in my direction. A bearish candle, 15-minute bearish candle close in my direction to take a trade here. Okay, so I'm not interested in this candle. If it did close bearish, maybe I would have taken a trade on the pullback to come all the way down here, right? That's about 150 pip move. But this one, no, because this is a bullish candle. Even though it did reject this area, it's still a bullish candle. I want to see a bearish candle close, 15-minute candle, bearish candle close in my direction, right, to take a trade here. Now, there is a 1-hour demand zone here. I mean, a 1-hour supply zone here, but I don't see a liquidity candle here, except for this one, 65 pip, and we could easily break that now, and price could push up. Yeah, except for that, the 30-minute, yeah, there is nothing. 15-minute is just that one candle. Yeah, it's just this candle here. Now, if I were to mark this candle here, 1018, 370, 1018, 370. So we have prices. I tapped it in. It's not a great area to take a sell trade. The EMAs are right there. There's no top wick, so we did break above this high. And this is the only candle, liquidity candle, and we did break above this high. And this is just 24 pips. That's larger. And on the 1 minute, $14, 23, 23 is the largest 1 minute candle there. That's 22. That's 22 pips. And this one is 23 pips. So this candle here, this candle right here, but price is already trading above it. We should push through. We should break this zone. Yeah, we broke on the high here. That's a liquidity candle, 65 pips. Yeah, we've come in. Yeah, we should break this zone. Yeah, we should break the zone. I'm going to just leave this here because what I want to see is this. If price breaks it, closes above, and the next candle closes back in, that's when I want to take a trade. I need to see a 15-minute bearish candle close back in this zone to take a trade down. Or if it continues up here, then I'll take a trade up here, provided there's a liquidity candle. I don't see one. I don't see one. No, there's nothing. Just fold this. I don't see one here. There is that 64. There is that 44. No, I don't see a candle here. There is nothing here to hold price. So if you break this, we're going higher. That's 38. This is larger, 43. There is nothing to hold price here. There is no liquidity here. No liquidity candle in this. So the possible trade for today, if there is a sell trade, might be from this zone here. On the 5-minute, there is nothing. There's nothing. It's just crap. This is just noise. There is no liquidity wick. There is no liquidity candle. This candle does stand out, but price is traded above it. Right? Price is traded above it here. That's 44 pip candle. That candle would have been ideal if price didn't break that high. If this candle respected this high and pushed down, that candle would have been ideal. Even here, that's a 57 pip candle. That's a 57 pip candle. That could be that. We broke on the high though, but it is a high liquidity zone. Let's look at the 5-minute. 40 pips. Yeah, that's a rejection candle here. 640.073. 640.073. Okay. Low 073, right? Yeah. Okay. Yeah, we've broken the high. Okay. So here's what I'm going to do. If a 15-minute candle closes back inside, rejecting and closes back inside, I'll look to trade that. I'll take sells going down first to 2600 and then all the way to 2591, right? So that should be about 150 pip move down. If we continue up, then this is the next area that I'm looking to. I'm going to be looking for an M15 bearish candle from this area right here. Okay. Now the zones are going to be, the stop loss zones are going to be wider. They're going to be wider because since Trump got elected, candles are much bigger. Daily candles are bigger. That makes the 4-hour and the 1-hour and the 30-minute and the 15-minute candles much larger, right? So instead of having 20 pip, 25 pip, 15-minute candles, you'll see 50 pip 15-minute candles, or 30, 40, 50, 55, 60 pip 15-minute candles, right? During volume hours. For example, look at that candle during volume hours. That's a 15-minute candle. That's a 169 pip candle, 15-minute candle, right? Yesterday during volume hours, after the New York Open. That candle is a 63 pip 15-minute candle. That candle is a 52 pip, 53 pip 15-minute candle, right? All these candles, 15-minute candles, all of them are larger. Prior to Trump being elected, 15-minute candles were 25 pips, 20 pips, 30 pips at the most. But now they're much larger, right? During volume, I'm talking about during volume hours, during the New York Open. In the first 2 hours, 2.5 hours of the New York Open, that's my trading window. You can see this 15-minute candle. This is the New York Open. Already 56 pips up. This candle with the New York Open, almost 50 pips. This candle right here, that's the New York Open candle. The candle prior to that, pre-NY, also 58 pip candle. The one before that, also 58 pips, right? So we are pushing up. If we head here, this light red area is the area that I'm looking to. I want to see touch, and then I want to see the next 15-minute candle close a bearish candle. That's when I will sell. And if I do sell, stop loss obviously will be above the light red area, or above this zone here, above the dark red area, and then a move to 2600, first TP around 2600 around this area, and then second TP at the demand zone. Okay, where are we on the daily? Yeah, we are pushing up. It's got about 5 minutes for this candle to close. Let's see where this candle takes us. That's 78 pips. There, I still don't trust the liquidity in this area. It's just very ugly. And that is why we wait for a 15-minute candle close in our direction. And until you see that, you don't take a trade. This candle was perfect if the high hadn't been broken. This candle was perfect. This is a perfect liquidity candle to trade. 57 pips if the high hadn't been broken. $38. 48. 30. 23. 21. 31. 30. 31. And this is 20. Nah. It's 40 right there. It's low. 22.15. 22.15. Yeah, if we get here, let's see, if price gets, we are about 80 pips away. Let's see if we can get there. If we get there and if I see a M15, if price touches this, and then I see the next M15 candle, if we close below a bearish candle, that's when I'll look to take a sell trade. Until then, I'm not doing anything. I need to see, look at the bullish volume. That's 110 pips already. Yeah, it's a 110 pip candle, 15-minute candle. That's how much volume there is now in the market on gold. Lots of volume. The next 3 years, at least 2 years, 2025, 2026, even 2027, gold is going to be on steroids. So compare that to 2016 when Trump was president, 2016, 2017, 2018, right? Those 3 years. It's those 3 years times 2, times 3, times 5. That's how much of volume you're going to see in the market. The markets, the last 4 years, the markets have been compressed, right? Compressed. And now you can see what happened the next day after he won. Gold made almost 1,000 pip candle. That's a 980 pip candle in a single day. That's the power of the market. That's that's how favorable Trump is to the market. So yeah. So as I said, so what I'm looking for is we've had a 15-minute candle close above. I want to see a 15-minute candle close back inside, right? Let's get rid of this. This is not important anymore. A 15-minute candle close back in, maybe then I'll take a trade, maybe, right? Or I want price to get up here, touch this light trade area, and then see a 15-minute candle close in my direction to take a sell trade. And yeah, so we should easily break. This candle has no bottom wick, so on the way down we should easily get below here. So that's at least about 130 pip, 25 pip move down for TP, and then down here. Um, there's a demand level that's been created here now that has taken out this supply, and this supply rally, drop, base, rally, and it's around 2600. So if you do take sells here or here, you want to take partials at 2600. Keep that in mind. You want to take partial because you want to close at least 50-60% of your trade around 2600. Keep that in mind. Okay, 50-60% of your trade you need to close around 2600 because there is a demand level there that has been created on the 1 hour, and it's also a psychological number. But I'm still waiting. I want to see a 15-minute candle close in my direction. Okay, so we've got about 12 minutes. I'll be back in about 5-6 minutes. We've got to wait for the candle to close. Got to wait for the candle to close. Okay. Okay, so we've got about 5 minutes for the candle to close. Um, it's moving down. It needs to close back below this range, right? It has to close back below. I don't want it to close above. I would prefer if it closes back below the range because my stop loss will be above that candle there. All right, so yeah, I want the candle to close back below. 636, 539, 636. Okay. Hmm. It's 55. So let's see. Just got to wait for the candle to close. 3 minutes more. And yeah, we got about 1 hour, 15 minutes for the 4 hour candle to close. That's fine. And the 1 hour is closing in about 17 minutes. It is rejecting that area. On the 30-minute, we have a. It's not that. It's not that level that it's reacting to. It's the. Yeah, it's this 15-minute level that it's reacting to. It's this 15-minute level that it's reacting to. $35. Okay. A minute more. So we are closing back in the range. Stop loss is going to be above here or above here. Okay, maybe above that candle there. And I want price to pull back. I'll take a small position here, but I want price to pull back. Yeah, I want price to pull back into this. $485. Low 6. Okay, that's one. Stop loss, I'm going to keep it above this range for now, but I'm going to bring it down. $485, 606. 485, 606, okay. So ideally I want a price to pull here to 2610.4 and 2612.6. That's the area. That's where I want to kind of see price pull back to. I did take an order here, but I wanted to pull back a little higher because we did close back inside the range. And then first TP around 2597, right? That's about 90 pips. Yeah, I'll take another small position there. It's about 90 pips there. $97.15. $2597.15. Okay, that's one. And then second TP around. See how the one I can disclose. Let's reject this area. Yeah. Close 260, open 259, 260. $2592. 2592. Okay. $43. Okay. 62. Okay, so it's 15-minute, probably going to push up. The next one's probably going to break this high and continue higher. That's why I took two very small positions down here. So first TP is around 2597, right, just under 2600, and then second TP is around 2592, another 50 pips below that. Let's see if we can get there. And if these orders get triggered, that's even better, right? But these are the only two positions I'm taking down here. If it doesn't come up and price heads down, then so be it. But if it does come up here and triggers these orders, then great. If it continues to come up further, right, and break, once we an M15 bull candle closes back here above this zone, and the next one breaks the high, then I'm going to manage risk, right? So if this M15 candle closes back above this supply zone, right? The supply zone's already been broken. Okay, so wait a minute. Yeah, yeah. So if a 15-minute candle closes back above this supply zone, right? A bull candle 15-minute bull candle closes above this supply zone, and the next candle breaks that M15 high, then I'll manage risk on these orders, right? I'm going to keep these orders exactly as it is because they're not triggered yet, but I'll manage risk on the ones below. The idea is that price respects this high or this high and continues down, does not go further, does not break this high or this high and go further up. If it goes further up, if it breaks this high, then we're heading to this light red area, and I don't want to hold drawdown. That's a lot of drawdown to hold. I'm not going to hold 75 pips drawdown, right? The whole idea is price has closed back in. That's a liquidity candle. We've closed back to continue to push down. That's the whole idea. Let's see. $53. Yeah, we should continue down. This is 50. That's a liquidity candle right there. 54 pips. That's the largest candle. That's the largest candle in that range. That is 42. That's a 44 pip candle. And that's a 45 pip candle. And that's 52 as well. It's a bullish candle though. 49, 50, let's say. This candle right here is the largest candle. Yeah, that's it. That's the candle. This high is 706, 706. Price shouldn't break this high. That high right there. You shouldn't break that high. 2617.06. We shouldn't break that high. And this low is 1164. 164. Yeah, okay, another order triggered, small order triggered. Let's see. We shouldn't break this high. We've touched it. Seven oh six one six four. 706164. Highs 567. Forty-nine. 54. Right. Mm. Let's see. We're still heading higher. Mm. This candle should break this high. The 15-minute candle should break this high. This is the 1 hour close. We've closed a bullish candle. It's probably heading higher. And there's a 30-minute bearish wick to fill. If you break below this wick, 30-minute bearish wick, we are coming down. We're coming down. The momentum, once price breaks this wick, it should have enough momentum to push price straight down another 80 pips to 2597, sorry, 2597. So let's see if we can do that. 9, 10, 30, yeah. Take another order there. Yeah, so we've got a demand zone right here, so you might get a bit of a reaction there. So if price does come there, if price does come to 2598, close, yeah, 2598, I might close 50% of my positions there, 50-60% of my positions there. I've got about 4 small entries there, because we've got a demand zone right there, rally base, rally. Also on the 1 hour, rally base, rally base, rally. And on the 4 hour, we are forming the 4 hour candle is going to close in 50 minutes, 57 minutes. So we are forming demand right there, right there, exactly where 2597, we're forming H4 demand. So it's not smart to hold a trade when there is already 1 hour demand and 30-minute demand, freshly created demand already there. It doesn't make sense. So I'll probably be closing most of my positions at 2598, 2597. If we get there. I don't know if we're going to get there yet. We have to break the M30 low for that. This M30 low, price has to break this M30 low to come straight down, to push down another 80 pips, 85 pips. Yeah, once it breaks this low, shouldn't be a problem to come straight down. Yeah, this is just noise. This is just noise. Once you break this low, this is just noise. We should break below that. Once you break below these lows, it's just clean space to drop to 2597. But we got to break this low first. This M30 low. This M30 low is 2605.5. Yeah, 2605.5. It's a long way to go until we get there. Yeah, it's got another 45 pips to break that low. Once you break that low, we should come straight down into this noise here, and then once you break those lows, it's just clean space to drop to 2597, 2598, 2597. So this is the liquidity candle that I targeted today for the NY session. This liquidity candle right here, and that liquidity candle is a 30. Sorry, what is it? Is it on the 5-minute? Yeah, on the 15-minute. That's a 53 pip candle, I think. Yeah, it's a 54 pip candle right there, 53 pip candle right there, that one. That's the largest candle in this drop. In this drop here, that's the largest candle above 2611.64. That's the largest candle, right? That's the largest bearish candle. It's 43. It's 39. 44. Okay. The market is slow today because there's a no news day, and tomorrow its prices is probably setting up for CPI. So if this trade doesn't work out, then that's it. I'm going to manage risk on this trade, and I'm done for the day. I'm not going to be doing anything else because tomorrow's CPI. So price is probably setting up for tomorrow's CPI move. So I'm not going to be doing anything else. I'm going to end the session as well. I'll be here for another. What time is the 4-hour candle close? 50 minutes. How long have I been here? Okay, I've been here for about an hour, 45 minutes. So maybe another 30 minutes. Maybe another 30 minutes. So in the next 30 minutes, I want price to either break this low so I can hold the trade down, or if it breaks this high, then I'm going to close. I'm going to manage my risk on this trade. If it breaks this M30 high. If it breaks this M30 high, we're heading much higher, right? We're going to go through this candle. It's a 60 pip candle. It's going to go through. We're going to go through this candle and go to this area. And I'm not going to be here for that. I'm going to close the stream, and I'm going to come back tomorrow and see what we have for tomorrow. I'm also going to try my best to the trades I take them only during the stream. I've been doing that, but there are some days that I've taken trades because there's been a setup after the streams ended, after the 4-hour candle closed. Price has set up for a trade, and I've been taking. I have taken those trades because if I did stream for that long, then the streams would go on for about 4 hours, and I can't be at the charts continuously for 4 hours. So I do set up an alert, and I come back and look at if price has got to a certain supply zone or a demand zone. I do come back and look at the chart, but I'm not streaming at that time. So, but going forward, I'm going to try my best to take all my trades, or at least 98% of my trades during the hours that I stream. Only during the hours that I stream, right? And not after that. I'll try my best. All I have to do is basically shut down the stream, shut down the computer, and not set alerts. Like for example, if price in the next 30 minutes, if price doesn't break this high or doesn't break this low, then I end the stream. But what I would do is I would set an alert here to see if price gets there and look at the 15-minute candle. Basically, if price goes there and we close a 15-minute bearish candle, then I would take a trade just like I did this, right? And the same goes if price gets to a demand level. For example, if price drop rapidly to this demand zone right here, this light green area, and I get a bullish once after price touches it, and then the next candle closes a bullish candle from that zone, then I would take buy trades, just like I took the sell trades here. I would take buy trades, right? But I would set up alerts to do that because they're outside of my streaming hours. But going forward, I'll try my best to take trades only within the streaming hours. So if I stream for 2 hours or 2.5 hours, then I'll take a trade only within those hours. That also helps me keep a journal of all my trades that I take for the week, so that I can go back and look at it on the weekend, look at the trades that I've taken on the weekend. We're still pushing up. We are still pushing up. It's like likely we're going to break this high. Once it breaks the high, I am closing. Yeah, once it breaks this high here, this high is 485. Yeah, once you break that high, mm, yeah, let's break this high. We got another 22 pips. Okay. Yeah, price did break that high. Where's the next EMA? Yeah, seems like we are heading higher. Gonna have to manage risk on this trade. Yeah, we touched this. Open 318. Size 377, 380. Yeah. So once I manage risk on this trade, right, we are heading higher. Once I manage risk on this trade, I'm going to probably end the stream because I'm not taking any more trades for today for sure. But just wonder if I should wait. This is probably the pullback for. Yeah, this is the pullback for tomorrow's. Let's see. I don't know what's going to happen tomorrow. We are rejecting 2600 though. We came very close to 2586. Yeah, we came very close to 2586. Did we touch this? Did we touch this high? 8968. Low 8969. Yes, we did. Yeah, we did. We touched this high. So, um, we are rejecting weekly support, which is that candle there on the daily, that high there, and rejecting 2600. So we could continue to push up. We could continue to push up to 2650, and then maybe continue down back to 2650 and then down. That's possible. So 15-minute candle closed back in that range. I think we're going to manage risk here once this high breaks 385. 385. Yeah. Yeah, once price breaks this high, we're heading deeper. Yeah. So then once you break this high, I'm managing risk on these orders below. And that'll be 65, sorry, 70 pips. 70 pips and 65 pips. Yeah, that's fine. Yeah, we're coming up. Once we break 1385, I'm closing these orders at the bottom. All right. I'm going to manage risk on these two once we break 1385, which should be now. Yeah. Because once we break that M15 high, we should continue higher. Yeah. There we go. Perfect. Once we break this high, we'll close another two positions. So the idea was that this candle, this liquidity candle would hold. This candle right here, this would hold and push price down. But that doesn't mean we hold drawdown inside it, right? That doesn't mean I'm going to hold drawdown. I am going to manage risk when price breaks M15 high. So this candle closed back in the range and price broke this high. I closed the trade. Now when it breaks the M30 high, I'm going to close another two positions. '86, yeah. Let's close that. Okay. Let's close another one. '85, size '86, yeah. We did break the M30 high. So price did come back, push up, break that high for us for price to continue higher, probably to this light red area, right? So that's it. I'm not going to be holding these trades. Just going to close this one as well. Okay, and that's it. I'm going to close these two trades once price breaks this high. Yeah, that's it. There we go. Done. Okay, that's how you manage risk. Yeah, so we're heading above here. We're heading to this area right there. All right, so that's going to be the end of the stream. We're going to be back here tomorrow during CPI and do the same thing, right? Okay. All right. See you guys tomorrow.